Looks like something really big is cooking up on the Bitcoin chart. Plus, we're going to talk about a very strange divergence in today's report of the Bitcoin chart price action. Let's go. What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we are going to jump in on this chart and give you an update since the last video and show you some very strange activity as we have a divergence between the Bitcoin chart and the DXY chart. But first, let me make this clear that this is not financial advice. I am only sharing my opinion and what I see in the chart that could influence the probabilities of what the next move could be. And when I say that, I'll be able to demonstrate it in this update about what that means. The chart can give clues as to what can happen next under normal circumstances with regular balanced buying and selling pressure. Now, when black swans happen, or major unannounced events in the regulatory world or in the news, that can mess up what the chart was saying and take us in a different direction. We have two types of people out there. In the first group, we have those who think the chart rules it all, and news has nothing to do with the Bitcoin action or anything else. It's just the chart. We have the other camp that says it's all about the fundamentals and the chart means nothing. So it's all about the news and what's happening financially with the project. Well, I'm somewhere in between. Actually, I'm more close to this side where I'm 80% chart and then 20% news and black swans, where during regular buying and selling without anything crazy going on, the 80% of the time, the chart's going to tell you what's going to happen next. And then that 20% comes in and screws the chart up where we're looking at it and it says it's going up and it actually does the reverse. Or it's at the peak of a movement and it looks like it's going to start to correct and then it just goes vertical. Just wanted to explain that. Now, in the last video, we were somewhere, let me show you where we were. We were about maybe right here in the middle of this pump. And if you go back and watch the video, I said that there is a chance that this pump is nothing serious. And I compared it to some of the previous green bars like this one, and this big one, in saying that it will probably get cracked down and rejected once we hit a significant point on the chart, which it did. So isn't that interesting? It's just like magic. We got right up to this line right here. We're going to see another line on the 4-hour chart. But as soon as we got to this upper boundary of this flat bottom descending triangle, we got rejected. And we can see two full red candles right along that line on the 1-day chart. Now let's back this up to the 4-hour chart. And here we have a little closer view. Okay, so let's scroll in here and we see this 50 EMA that's bouncing around. And right now we see action that occurs above and below the 50. And so for a while we were beneath the 50. Then we tested it, came back up, and it was just stuck on the 50. We went down, tested it again, and then it was support. We jumped up above it. And then we bumped our head right there at the top of this great big wedge formation. Now here we go. We're coming down again. We almost wicked down to the 50. And I would suspect that we could bounce on the 50 and come back up to this line again. Or we could travel all the way down to the bottom of this long pattern that we see forming. Now, here is something for Woody, who asked me for some basics. I'm going to cover some basics in this video and the next one. And today we're going to really make it plain and simple on the stochastic and the MACD. Now, the kids like to call it the MACD, but I'm old school and I call it the MACD because I'm stuck in 1999 when I was trading on the NASDAQ and the penny stock market. Now, when we look at this stochastic, it is a cycle, and we have a fast line and a slow line. So picture a tug of war, and on one side are the bears and the other side are the bulls, and they're pulling on that line. And a cycle would mean where the bears are pulling on the line and they get closer to this side, but then the bulls start pulling on the line and they get closer to their side, and they're trying to yank each other over the line. This fight is happening in this triangle here. And then at some point we have a breakout where the bears or the bulls will pull their opponent over the line and win the game of tug of war. And that's when we have a massive break to the upside or to the downside. Okay, so as the cycle is going up, the bears are pushing, but we notice that the price is going down. That's really weird. That's a weak cycle. So then we cycle down, right? And then we look at where at the bottom it coincides with a certain price, where it almost touches at the bottom of the triangle. At this stochastic cycle, it touched almost at the bottom of the triangle. So then we cycle up, and here is a peak point. We want to see, how did price do at the peak stochastic cycle while they're playing this tug of war, pulling on the rope back and forth? Well, as the bulls were pulling the bears towards the line, here is the best that they could do right there. And that was less than what they did on the last surge when they were in their upcycle. Notice how we touched on the top part of this line and then it came back down. So then here the bears pull down and they've got the momentum. But notice upstairs at the price, all it did was pull it down to here. We have higher lows. That means the bulls are gaining control because the bottom points, in other words, every time the bears pull the bulls back, they're not pulling them back as far as they did the last time because they're getting tired. So then on the next peak, here's where the bulls are pulling, but then they're getting tired too. Lower high. Okay, that's how we can kind of tell what's going to happen. Usually higher lows mean you could break out, but we have higher lows and lower highs. So that's a wedge. So within this bigger formation, we had this happen. And then after we got to the apex of this parallel triangle, or I keep calling it parallel. It's not a parallel triangle. Symmetrical triangle. When we get to the apex of this symmetrical triangle, it usually breaks out, and it did break to the downside. All right, so it went down this way. But then after that breakout, where did we fall? Well, we still found support at that line right there. So then we started the process again. The bulls start pulling on the line, and at the top of the stochastic, this double top here, we came up to these two peaks. And then the bears start pulling. And once they got it down here to the bottom, it took 1, 2, 3 heave-hos before they got tired and had to rest up and gather their strength. We had a higher low. And then here come the bulls again with a double whammy here where they started to pull and it didn't go much, but then they pulled and kept on it and it popped all the way up to the top of the line. Notice that we had a peak here and price wasn't moving. It only made it to there. And that's like tightening a coil in a spring. And when it lets loose, pop, it's going to pop out. So when price is staying flat, and then you have a stochastic move, moving big, when it comes out of that, it's either going to pop up fast or pop down fast instead of a little boring move. So there's the peak. Now we're moving down. And notice that we're moving way down and we're touching this 40 line here on the stochastic cycle, but price is not moving down that far. We're just barely here touching down on the 50 EMA. So that tells me that it's going to get pushed up to this line again, and then we'll see. Will this push break us out or keep us here? And if the price works its way back up here and we're still sitting in this range at this line, then it's confirmation that we're going to keep on winding up the spring the tighter it goes. And then when we get to the end of this and it breaks out, it's going to go snap and it's going to explode up or down. The next thing you have to do is decide, what are the probabilities? Is it more of breaking out and going up or breaking out and falling down? Now, we got to go back to the one-day chart for that, and then we're going to look at the DXY and then end on the 1 week chart. So here we are back again, and you know that in the last video I talked about all of the flag formations, the pennants, the upside down pennants. When price is generally moving up, you get the bull flag that looks like this, okay? And you also get the bullish pennant that looks something like this. You also get the bullish descending wedge that looks like this. And then you also get the bull flag that is flying high like this. That's during overall upward movement. Now, when the market is moving down, what do we get? The combination of the exact opposite. Flip all of these and you get the same thing, and you will see them. There is one right there, upside down version of this one, okay? Here is a miniature one that is the upside down version of the pennant. Here is another one where you have the one that basically the top of the pennant will be flat. It's a rising, and it looks like that. There it is, upside down, right there. Same thing, because we're in an overall downtrend. That's why I say the probability of the decision point here is to break to the downside. We keep coiling up around this point of control price, or actually this big volume node. The point of control price is here at the red dashed line. But we are winding up at this big volume node because there's a lot of trading that happens around this price area right here. That's what the VPVR tells us. So we also will look at the MACD. And downstairs on this MACD, let's just scrunch this down so we can really get a good idea of what's happening. And we'll look at it at the close on the 1 week. The MACD has oscillators too, just like the stochastic, but it's slowed down. And it gives a very longer moving overall average instead of this shorter moving average. And when you slow it down and you take a lot more back area to get your average position of each oscillator, it tells you where the general momentum is going. And we'll talk more about that on the 1 week chart. Let's bump up to the DXY. There's the DXY. And we notice something. It's not huge, but it's there. After we violated this line, the black dashed line that was pretty much telling us that there's support here along the 50 EMA, we broke support right there, and then we came down to the 200 EMA. Now we broke the 200 EMA, but will it stick? It might. We just had a near crossover here that would have been a bullish cross, but it unfurled. It came up, the fast line touched the orange one, and then it unfurled and it opened back up bearish, where the blue line is still below the orange. The same thing happened in the stochastic. Fake out bottom here, fake out bottom there, headed back down here. Sometimes it can stay stuck in this area, just like it can stay stuck in the top area. Could this mean a change in overall momentum? Notice how all of these peaks here, they started to lower down, and the general direction of the stochastic oscillator was pointing down. And that coincides with this peak coming down to the point that we are right now. Now, we don't have more than one red candle that is closed below that 200 EMA, but that's confirmation of a possible pivot. So while we're moving down, why is Bitcoin price moving down? Because usually as the strength of the dollar goes down, in other words, the dollar is cheaper, that automatically makes the price of Bitcoin go up because the dollar is the index. That's why we call this the DXY. So if the dollar inflates and becomes even more worthless, let's say right now the dollar is worth $1. But in terms of inflation, within the next few months, it's only worth 10 cents. In other words, it cost you $10 to get $1 worth of something at the grocery store. And let's say something catastrophic happened in 3 months. Well, that means the price of Bitcoin would go up by 10x. Do you understand why? Think about that for a minute. So that is why it's very odd that the DXY is sinking and the Bitcoin price is also sinking. Maybe it would be sinking a lot worse if the DXY found support here and was moving up, which tells you something about the health and condition of the cryptocurrency market. In other words, all of the FUD out there, the bankruptcies, the scandals, the FTXs, the Solanas, the lunas, all of that is having an effect on overall value. Think about that. All right, so enough of this chart. Now we're going to jump back to Bitcoin and end this on the 1 week. And I'm going to show you something. Here in this overall picture, there's our flag sticking out. Now we can see where we're possibly going. If the momentum continues, we're stuck at this volume node here. But the next cluster, you have one spot here that is sticking out above all the rest, and that's right at somewhere around 13, 14,000. But then the biggest amount of the cluster is down below, and that's in the range of 9 to 11,000. And that's why you see a lot of people talking about this area. Now, what is the MACD doing? Well, look at this. Look at the overall direction. I've been talking about this for a long time, how we have had descending peaks on the MACD oscillators since the all-time high. We had the peak here, the double peak. Now look at this. MACD peak number 1. MACD peak number 2 is lower. Then we had this peak here. MACD peak number 3 is lower. And now we're fighting here. When we made this wedge and we dropped down, this could be a peak, and this one would be number 4, lower high. And as you can see, we're about to go into the negative zone. As these green bars went from solid to light, we might be dropping below the zero line to make red bars. And if that happens, it would coincide with a dip down into this area of the VPVR. So I use this overall direction. Overall, we were doing fine. We had a big rise. And then we had a rebound, but it was a smaller wave. Then we had a rebound, and it was a smaller wave. Then we had a rebound, and it was a weaker wave. And notice that each grouping of the bars on the histogram gets smaller and smaller as we go. So that's how I use the MACD. Okay, I'm going to end that for now. And I still haven't given you part 2 of the interesting indicator. I'll just give you a hint. It has to do with the Fibonacci retracement that tells us something interesting about the drop that could be happening. And I am still working on the Tether report. I'm going to share some interesting information with you on Tether that seems to survive all of this hideous mess that has been going on with the corruption and nonsense in the crypto industry. So that's coming. Keep your eyes peeled. And I do have a short. Go look at my short. It talks about the interesting things that we might or might not have known when Solana first blew up and how it was related to Sam Bankman-Fried fraud, FTX, of course, the Tether token, and the amount of Tether that was being used by FTX in relation to the amount of Tether being deployed and used in the overall market. So that's all I've got for now. I would love it if you would like, comment, and subscribe to the Crypto Pro channel. I appreciate all of you being here. And if you would like to donate to the cause and help me defray the cost of producing these videos, you can be like Woody, who made a super thanks donation last week of $10. Thank you, Woody. I appreciate that. And I hope you did enjoy the answer to your question that you posed, and look for more basics on my favorite oscillators. I will talk about the on-balance volume in the next episode to give your 2-part answer to the basics and my favorite indicators. That's all I've got for now. Stay tuned. This is Carlton, and I am out.